will a white knight come to the rescue of the beleaguered water treatment firm? Well, observers say this is a strong possibility, even as Hyflux is in talks with 29 potential financiers for rescue funding to the tune of 200 million Singapore dollars. Hyflux was recently granted a 6-month lifeline to ward off creditors and reorganize its debt, and Tanoto has more.
A bank debt of $1.84 billion and other outstanding liabilities totaling $1.2 billion. That's a dead weight Hyflux has to shake off, and the clock is ticking. Apart from the rescue financing, Hyflux is still seeking a buyer for its Tuaspring integrated water and power project, which has been weighing down its earnings.
I think obviously you want to get the best price, and the best price can only be offered by those players who can derive synergies out of this purchase. So it should be one of the existing players who are in this water or electricity market, that can actually extract more value and, can afford even up to the book value. Synergy is very important, but of course, you can also look at potential white knight who are holding companies who might see the optimization in terms of their portfolio of businesses.
At a glance, observers suggest these companies could include SGX-listed firm Sembcorp Industries, which is also involved in the water and power utility business. In fact, Sembcorp Industries is buying Britain's largest flexible power generator, UK Power Reserve, for $390 million. Other potential candidates include ST Marine and Tuas Power, both of whom formed a consortium to build Singapore's 5th desalination plant on Jurong Island. Besides these local companies, observers say foreign investors could also be considered.
There has been some, a different number of small funds, foreign investment as well. So some people would like to delocalise the project and maybe get their hands on some of the project at a cut price offer. I would expect they would come from private equity or distress funds.
But since water is an existential issue for Singapore and national security is at stake, the pool of investors could be limited. Observers say there's a chance an investor like state investment firm Temasek Holdings could step in.
It has the capital backing to be able to come to the party. Whether it sees the investment as just a distressed offering, which can look to rebuild in more of a strategic approach and keeping obviously the business localised here in Singapore.
However, observers stressed that Temasek should not be seen as a bailer of last resort.
We should not probably run a country or run its businesses on the pretext that if we are in certain preferred industries, by all means go and take high risks, and if things go up, you get all your benefits and your incentive. If things go down, there will be some sugar daddy that comes and bail you out. I think it is definitely not the right starting point.
For now, Hyflux will have to appear before the court at the halfway mark of its 6-month moratorium. Now, this is to provide an update on the process of its reorganization.
Well, anxious stakeholders of Hyflux can look forward to getting some answers at 3 town hall meetings planned in July. This is part of its survival plan to get the cooperation and support from groups that include creditors, bondholders, and shareholders. But what lies ahead for the company and those with money in it? Well, Cheryl finds out.
Hyflux stakeholders could be feeling lots of anxiety over the uncertain prospects of the company. Creditors will be wondering when their debts will be paid. Bondholders could be concerned over the defaults of their coupon payments. And shareholders could be feeling stuck, knowing that they can't unload their shares or make an exit. But soon, they could have answers to some of their burning questions from Hyflux CEO Olivia Lam during the town hall meetings set for next month. The meetings will likely aim to pacify concerned stakeholders. Analysts say that Hyflux is standing on its last legs and that securing $200 million worth of rescue financing is paramount. Experts shared several possible outcomes for the company. First, even if it improves its cash flow, it will still likely need a scheme of arrangement, which has to be approved by creditors and the court.
We would likely see restructuring of liabilities, those owed to the banks, to notes and bond holders, perpetual securities holders, and other trade creditors. Now, of course, who gets satisfaction first and how much really depends on the terms of the scheme, which vary in every case.
If no white knight comes forward, the company may undergo judicial management, where a judicial manager will try to help it continue its operations. But if not, liquidation will loom large.
There will be a range of subordinated debt which will be created, or a debt ladder, with probably banks being paid off first. The concern is that investors probably won't see, or they'll be last on the list to be paid off. So, people who have been invested in this love story, the Singapore love story stock, really are going to suffer.
Hyflux CEO Olivia Lum said that unsecured creditors may suffer a 72 to 75% loss of face value. But for now, it seems employees' paychecks are not being threatened.
There has been no indication from Hyflux that employee salaries are likely to be affected. But in a liquidation scenario, the legislation does provide for employee salaries to rank high in the order of priority of payments among unsecured debts.
Now, all that stakeholders can do is wait for the town hall meetings next month to hear what Hyflux has to say.